I place such a emphasis on selectivity.
Why?
One of my best qualities is that in high opportunity times, I'm able to push A trades. Let's say that you're trying to find out, why did this breakout work? Well, look back, see what characteristics of that breakout. Try and pinpoint why certain things work and then build out your playbook from there.
You know, I'm curious on the whole idea of the pod. Can you give us a little idea of what that looks like?
Having people that hold you accountable for trading correctly and sizing things correctly is what allows you to.
Someone who's listening to you talk right now, and they're like, okay, I'm gonna categorize my trades. What is the easiest way to do that?
I think.
Welcome back to the show, everyone. Today is gonna be a fun day. We're here in New York City at SMB Capital talking to my man, Max. He's 26 years old. He's been trading for quite some time. If you don't know who he is, you gotta go watch the previous episode. We've had him on the show before. We talked about his entire story. But Max, welcome back to the show, man.
Awesome, thanks for having me.
Absolutely. So I'm so happy to be here because I know that you've had some historic years back to back since we last talked. Mm-hmm. And I think like in 2020 is when we initially connected. And then can you tell me real quick like how 2020 ended all the way up till now?
Absolutely. I mean, so 2020 was a absolutely, great year. Ended around up like mid six figures.
Yep.
And then from that point, I was able to basically jumpstart my growth here. And 21, 22, and 23 were all seven-figure years for me.
That's amazing, man.
Thank you.
What do you think helped you continue that growth, especially as the market started to shift? Right, because it was like a hot market, then it got a little warm, a little cooler, and then it gets hot again. So, like, how'd you continue that growth?
Absolutely. So, one of what I think like my best qualities is that in high opportunity times, I'm able to push A trades. So, 21 there was consistently A trades, and being able to basically have multiple points of just exponential growth from those A trades was. Was key. Basically, using every last big win to, jumpstart that next big win. 2022 was definitely a more challenging year. The year started off very good, but then obviously things slowed down. I think that the one benefit though of that slowdown was that it forced me to really refine my risk management skills. The one thing that it forced me to do was to become a lot more selective, which also then forced me to better identify what trades were A, B, and C. And that's what led to 23 being incredibly consistent. In 23, basically every month was just a steady trend up. And that's what basically allowed me now to keep going up and keep trending up in P&L.
What do you mean by you were forced to kind of adjust and look at your risk management a little different? And what you said was figure out which ones were your A plus. Mm-hmm. What happened? Did something hit you? What happened during that time?
So in the beginning of 22, there was a lot more range, and especially with option trades, there was a lot more volatility to take advantage of. And then once kind of the bear market started, trading options, at least from the long side, was extremely detrimental. And it forced me to, one, better define my options trading, but also then to playbook better what trades were A trades. And those same trades came up in 23, and I was able to better identify which trades I should be putting on with greater risk. And then especially now in 24, when there's just that much more range. I think that I definitely got a little bit sloppy by thinking that too many trades were A trades. That's probably the one downside of 21, in that almost every trade worked.
Yeah.
And each trade was so forgiving that you were given outs that you were not given in the in the back half of 22. So now going into this year, my playbook is a lot more refined. And it's much easier for me to identify times when I should not be putting on risk from when I see the opportunity and I'm like, okay, this is it.
So, very curious, because I know people probably gonna be like, what? Well, okay, you hit a little rockiness. Like, what did that look like for you? Was that like a pretty big drawdown, percentage wise? Like, what kind of drawdown did you experience, and how did you kind of? I know you had a solution of focus on your A setups, but was it that quick of a decision? Like, okay, that's what I got to do, or did it take a little bit for you to come that conclusion? Like, how did that happen?
So I drew down 50% of my year in 2022,
Okay.
and it basically came in 3 months. It came July through September.
Okay.
Like that year, my best trade was bouncing the Chinese stocks like BABA, FXI, all those names, and then things kind of slowed down from there. But things really slowed down in the summertime, especially through the options trades. More so than usual. I mean, like the summer's usually slow, but it was just like more than usual. And then from October of 22 and on, I basically had to start from scratch and really truly identify which trades were worth it and slowly build back up. The exact same way to how I built size in 21, I had to redo that in 22 because I didn't want to keep like digging myself into.
Did you decrease size as you were digging a hole? Like, did you have like things in place to help you maintain that? Like not just blow up, right?
Yeah.
Because obviously you didn't. So like, did you have like rules in place that help you kind of manage that and manage it back up? Like, what kind of management was that? Like, was there a percentage?
Yeah. So like the first month of the drawdown, I stayed for the most part at the similar risk rules because at that point I was not able to identify that something was very wrong.
Yeah.
But then after that second month, I went down to a third of my daily stop and just kind of wanted to build back up that base because also from just a mental comfort, point of view, once you can build off that base and once you have put in like your worst, then you can start to at least like mentally feel better that you're not in this like free fall because as you're like going down, you're like, all right, I'll never get this bad. I'll never lose more than this, and then you're like, okay, I'm still losing. So once you just kind of take a step back, you size down, you're able to build back up that confidence. That's when I think it's that much easier to put that size back on. I mean, like trading is so much mental that you have to be in the right mindset, and then. How I ended up getting out of the hole was in the beginning of 23 through the banking crisis. That was an incredible opportunity, and between March and April, I got out of like basically up to like the break-even mark.
Yep.
Like for me, like my skills in 2020 and 21 were a lot tape-based. So in a highly volatile tape-based environment, those were key setups for me to put on real risk. Unfortunately, in my head, I'm thinking that if I was not in that hole, I probably would have made 2 or 3 times the amount. And that's one reason why right now I place such a emphasis on selectivity.
Okay.
Because I want to make sure that I'm in the best mindset possible for those A trades. Because like me just trickling lower in a lower opportunity market is going to cost me a lot more than just like giving back a little bit of profits. It's going to cost me not being able to size up those A trades, which is what, for me at least, is going to make my quarter or my year.
So you mentioned a lot focusing on the A trades. So you're a discretionary trader, would you say?
Yeah, absolutely.
So how do you really? It's really hard to differentiate. This is for sure an A setup because every discretionary trader can see things different.
Yeah.
So how do you quantify a discretionary setup? You know what I'm saying? Like how do you and how much wiggle room or forgiveness do you give yourself to? Because if you get so strict, at least me personally, like if you get so strict, and then you're like it's an A plus, but it's easy. This is my own experience, but it's easy to be like, well, there could be slightly off here because you are slightly discretionary.
Yeah.
How do you give yourself? How do you work with that?
So I think that you break down the setup and then you find reasons as to why it's A minus, B plus, all those sorts of things.
Yeah.
And then in your risk rules, you have set amounts as to what you want to risk per setup. So the easiest way to really describe this is a swing setup, right? If let's say a perfect like swing setup does X, Y, and Z. If one little thing is missing by the close, okay, now you size down to A minus. If 2 things are, maybe now it's a B, right? If you go through a checklist, that's how you can prove to yourself that it's a setup. also, by doing this a few years, you also build your intuition. I mean,
Yep.
part of it, especially for me, is just using like my gut feel. Whether or not that works or not is a different story, but trading on your gut is what also allows me to feel confident, in the trade. If, let's say, on paper it looks great, but inside I feel like there's something wrong with the trade, then I'm probably not going to like manage a risk correctly, and therefore I probably should not put that on, because if I know that I'm not going to manage the trade right, then I'm obviously too big in that trade.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you could just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. Would you say some of your, what signifies an A, B, C, is some of it also like, I don't know your trading, your actual style per se, but would you say you use like somewhat patterns as well? Or is that part of your selectivity? Or is it more so focused on, there's a catalyst, there's volume, like things key areas that are always easy to track and tick off to make an A? Or because the patterns themselves, let's just say it's like a symmetrical triangle or something, whatever it may be, that could be slightly different per the viewer, right?
Yeah.
So that's the part, if that is part of your process, how do you deal with that discretion to be like, okay, it is an A, because especially if you're teaching someone new, which we'll talk about in a second, you have a pod that you train as well. Yeah. How do they, for certain, know this is an A? You know what I'm saying? Or there's never really a no? So
there are patterns, and then, for example, there's patterns, there's a risk reward.
Yep.
Like there could be a great breakout, but if it's not a good risk reward, in the long run, is that trade going to work? Or if, let's say, that the trade is an options idea, well, that option has to be priced correctly, because you want to just like make sure that in the long run, those trades are going to be successful. If you're putting on trades that are only 1-to-1, and you're right 55% of the time, you're barely going to make money. Yeah. But if you can clearly identify 3-to-1s or 4-to-1 trades, and you're right 55% of the time, in the long run, you're going to do quite well.
Yeah. And what's interesting is when I heard you talking about how you really want to focus now, especially in 24, just like the best setups. Does that mean, and I know you mentioned you might trade the smaller setups, but just kind of like churning your account, maybe slowly grow it and waiting for the big ones to move the needle? Would it be better to not even trade the other ones at all and just wait? Like, I'm just curious if you do that sometimes, or if you continually trade both. Like, and if so, why? Yeah, so I've thought about that. I think that through experience, you're able to turn B and C trades into A- and B trades by being able to refine them and to figure out what characteristics actually improve those trades. So for the last year, one of my main goals has been to improve my intraday trading. I was doing well with the option stuff, with swing stuff, with like small caps, but just very typical intraday patterns was an area to which I was lacking. So those trades to me were B's and C's. Yep. But now I'm definitely sizing like some of those as A- and B+. If I just like never tried those trades, then I wouldn't be able to incorporate those right now. Yep. And by sizing those trades as B and C, it's never going to dictate my month, but it's going to give me that experience. So now 1 year later, it actually is dictating my month, but in a good way. That's a good point. Now I'm curious on someone who's listening to you talk right now, and they're like, okay, I'm going to categorize my trades. What is the easiest way to do that? Is it just like by memory, like they should have an idea of like what works the best? Should I just go look at their like any idea on what's the best way to go about and doing that?
I think one could be your success rate. You know, if there's a trade for you where you're right 80% of the time, it's probably an A trade. The second is how many bullet points were checked off. Was there a catalyst? Was there good volume? Was it a swing idea for you? Or, okay, maybe it was a intraday. Another way to do it is, do you trade in a pod where everyone thought that that was a good trade? I mean, if you're doing team trading and you know that on the best ideas, everyone is going to be kind of in the same position and everyone is also a good trader, that could be something that you can use to your advantage to size up those good trades because you're managing them correctly with your team. Everyone's different, but being able to identify what specific parts of that trade gives you edge, and if the long run it's incredibly successful for you, it's probably a trade then.
So speaking of pods,
Yeah.
you are now part of a pod, and can you give us a little idea of what that looks like?
Absolutely. So in the morning, we usually do a call sometime between 8:30 and 9, but we're just nonstop speaking. You know, if someone has a trade idea at 10 p.m. or 7 a.m., we'll all just like message. We'll try and like think through things. We will also support, you know, each other in trying to grow our risk and trade properly. I think that speaking back or going back to the mental part of trading, having people that hold you accountable for trading correctly and sizing things correctly is what allows you to grow. You know, kind of goes both ways in that sometimes it's easy to size things down and get too comfortable, and that's going to you know, hold you back. And if you can be in a pod that's like, you should have risked more or you should have risked twice the amount, then that's something that could like benefit you in the long run. Also, by being, you know, in a pod, we also have like joint trading accounts where, you know, for like the best trades, we're putting it on there. It's a great way for us to size up those trades, and you know, it's also a great way to separate out trading styles. You know, like for example, if let's say there was a intraday breakout, and you know, I wanted to take that breakout for a tape trade, just like something quick, and lock in some profits. Well, the joint trading account could be for that bigger 1 or 2 day idea. And by being able to differentiate those sizes, it lets you trade both correctly.
I'm, you know, curious on the whole idea of the pod. It must be important to make sure that whoever's in part of that group is, you know, like confident enough to like talk back.
Yeah.
To be like, I don't like that. Like, how do you think that's important? If so, like, are there other things that are important before you just buddy up with some guy you just meet, right? Like, I'm just curious, like, what are you looking for in like a good trader to like mingle with, or what are some things you should be looking for if you're doing it on your own?
Absolutely. Just by nature, I'm a very straight shooter and a very type A kind of personality where if you're wrong, I'm going to say it, and I expect like the same thing from, you know, like the people that I'm working with, being able to have the self-confidence to be able to take criticism, but also be able to assert yourself in your best trades is key. Like if you want to be a valuable member, you have to be sitting there and saying, I like this trade, you know, is an A. You got to give that value. If you just like sit back and say, yeah, this looks good, oh, wonderful, right?
Yep.
You add zero value. So like you have to be able to kind of give that confidence, but also be a receptive so that you can grow, you know, like for your trading, but then also down the line give back to the pod.
How are you working on intraday trading? You said that's an area that you're working on. How are you going about that? And I'm curious on how your risk differs in terms of, you could say percentage, or we could say, let's say your biggest trades are 10 and your small, like that, those are what, 1, you know, just to give us perspective on how you're actually working on that.
So I think one, just like defining things better, putting into place rules into what I want to see. That's one area. And then 2, also just trying to slowly size up. Just like sizing up to a point where I don't feel too uncomfortable, but it's big enough that I'm making that growth. Another way is also with the joint trading accounts. Being able to put those A+ intradays on the joint is a way for me to, let's say, add 20 or 30% to that risk. And then going back and cataloging all of those best trades, so that way the next time that you see them, you can be like, okay, that's it, and put on like that much more risk. Another way for me now, and this is, especially something with like the market getting, a lot more in play, is trying to incorporate idea trades. If let's say that you're trying to set up some big breakout trade, a great way to do that for me is to put on a core through options, something that is more in my wheelhouse, which is options, in which I feel comfortable with a defined risk reward. So that way I know that I'm building from this base position and I'm starting out in the proper mindset of that trade management. Like sometimes if it's just equity and you feel like, all right, something's wrong, maybe like you're not going to manage it as well because for whatever reason. But if you can find some way to incorporate something that makes you feel comfortable, then you're able to grow exponentially from that position. I mean, there have been like countless trades where the option, let's say, was a size C, and because you're doing things correctly, you were able to grow that to a risk by the end of the trade.
You mentioned it quite a few times the mental.
Yeah.
And you mentioned at the same time, a trader needs to be able to do the right things, like execute well. What does that entail? Like not talking about setups, because let's just say all things equal, let's say everyone's trading the same setup.
Yeah.
Like what are those things that you mentioned? Because you kind of just briefly went over it. You're like, yeah, I just want to make sure that the trader at least knows how to execute well, whatever. What does that entail?
Yeah.
Because if that doesn't go well, it seems like whether you have a good setup or not, you're just not going to be profitable. So what is that?
I think that one, it's a self-recognition of what are your strengths. So for me, that's being aggressive. Maybe for someone else, that's being super systematic. So for that super systematic trader, that trader must just put on a risk when their like playbook says put on this risk. For me, maybe that's a more intuition based. So therefore, I have to listen to myself that when my instinct says this is a good trade, I got to use that aggression to act. I think overall, it's ensuring that you are constantly using your edge, and whatever like your like mentality is, you have to be able to find that moment in the market where your edge in a mindset just matches like whatever that opportunity
setup is.
Yeah.
Now let's just say and maybe this happens, but if not, let's just pretend your best friend calls you.
Yeah.
Calls you today and he's like, Max, I saw your interview, man. Yeah. What's going on? Why didn't I know about this? You're so successful. You're doing very well in trading. Like, what should I do right now to get to where you're at as soon as possible? What would you tell him?
I think that everyone needs to start from a base. I mean, if you don't know, anything about the market, just start reading up, trying to understand why things move a certain way. That's not like meaning to just go and watch like financial news, because that's not what I would suggest. But one of the best ways to learn trading is by just watching the price action, seeing why things move, why things don't move, and try and find characteristics to explain those moves. So if let's say that you're trying to find out why did this breakout work? Well, look back, see what characteristics of that breakout. Okay, was it a clean pattern? Was it the volume? Try and pinpoint why certain things work and then build out your playbook from there. You can start out with demo trading, but that only really gets you so far. I mean, being able to actually really feel how it is to like make and lose money is key. And when you start out with a amount of money, it's not too big, but also like not too small. If you're only risking $5, then you're probably not going to feel what that loss is. Yep. But if you choose an amount where you can see how your trader emotions come out, then you can build and refine on that and then grow from there and then see if that's something for you. And then once you can get your mentality right, and once you have a few setups that work, well, that's how you can grow. And also just kind of ensuring that you survive long enough for the good opportunities. If you, let's say, started June of 2022 as things slow down and you're like, okay, for the next 6 months, I'm gonna go balls to the wall and like this is it. now's a very bad time to start. But if you gave yourself enough leeway, saying, okay, for the next 3 years, I'm going to do this, you probably saw enough trades over the last 2 years to be able to see what makes a bull trend, what makes a bear trend, why are certain things A+ trades.
Yeah.
And after like the first year, even if let's say that you were just like break even, you probably have 2 or 3 setups that are like, wow, this is A+. And frankly, all you need are like 2 or 3 good trades per year if you put on the right risk to have an excellent year.
So you help traders as well. What would you say, let's say just in your mind, there's probably been a trader you've helped that didn't quite make it, and then there's a trader that you helped who is doing really well and is probably your next rising star.
Yeah.
They're both getting the same training, so what's the difference?
I think 2 things. One, it really comes back to the point of differentiation of trade size. There are a lot of people that I see that will just put on all of their trades and it's just all basically like the same size. Most traders I know are not right more than 50% of the time. Most traders probably have between a 40 and a 50% win rate. But the traders that do well risk 10 times the amount on their best setups because those setups are probably an 80% win rate. But if you're sizing those 80% win rates the same as your 30%, in the long run, you're just gonna pay fees, churn desk fees, and break even. Another thing is that the people that do really well are able to truly capture their edge in both a structural point of view in their trades, but also in their trader mentality as well. I mean, like the guys that are really good, when push comes to shove in those moments, you can hear it in their voice, this is it, I'm gonna push. It's not gonna be sitting back in your desk, putting on the exact same, like trade size, but okay, FRC, this is probably worth the exact same as a 0.6 R-ball breakout. No, like the guys that put on the real risk during that opportunity are gonna be the guys that are really successful now and whose stops are probably 5 times as big now because they made their quarter doing that trade.
So going back on the idea of your pod, could you share with me like how you communicate with them on a regular basis?
Yeah, so I'd say that like we all wake up probably between like 6:30 and 7. We usually check in to see if there's any opportunities before the open. For the most part right now, there's not as many. Like back in 21, like we were at the desk, sometimes at 4 a.m., sometimes at 6:30 trading pre. But usually now it's just a quick check-in, and then we'll then like meet up on audio probably sometime between 8:30-ish, and that's when we'll do the morning call. Usually during that call we will game plan if there are any big opportunities, so A trades, and then we will also discuss if we're going to do any joint trades. Usually those would be the idea trades that we see, a real reason for why those are A trades. Like we're never putting on anything that's not an A or at worst a B+ on the joint. And then from there, we will usually, a few minutes before the open, say, okay, what is going to be the first montage or ticker on your screen? And then the day starts, walk through everything, usually calling out any just like main trades. And then for me, at least like midday, like usually I'll work out. Times when I won't work out is if there's some event midday, things are super active. But otherwise, I find that just being able to take a break from staring at the screen is a great way for me to refresh. Also, a big part of my business is doing swing trading. So staring at a screen for 6 hours and then transitioning to putting on some big swing trade, it's not really ideal. But being able to leave, like refresh like my mind, come back and then game plan the close with a clear head, it's a lot more favorable for putting on real risk. And then usually we'll finish out the close, manage out any positions on the joint, discuss game plan for the after hours, and then usually, if there's stuff after hours, then we'll stick around. Sometimes till 8, sometimes till 6. I mean, it really just depends. If not, we'll probably be done by around 4:30, and then we'll still be speaking throughout the after hours. If something moves, we'll be like, hey, this is moving.
Yep.
Or hey, I'm going to put on this gap or this swing. Or just like whatever it is. Usually they were not done speaking until like 8:30 or 9, in the
Then
group
you guys
chat.
are at it.
Yeah, I mean, it's to be really successful, like you have to always be on. One of the beauties of this job is that there's slow times where you can kind of be more laid back, but if you're not fully on and fully present during the best opportunities, you will miss out. Because if you miss one or two really good opportunities, what if that's the year? I mean, like for example, like this year, what if the first 2 months with the semis was the only opportunity, things are going to die off, and now it's going to be all B and C trades? I don't think so, but it's possible. I'm sure that there's going to be 1 year in my career where the first month was it, and then after that I look back and I'm like, I should have made more because everything else sucks. And if you're not there and you're not fully present in the market, you could miss out on the best opportunities.
So before we wrap this up, you also work with a lot of other great traders.
Yeah.
What are you trying to learn from other traders who are at your level or better than you right now?
I think that it's just seeing how do they see those trades. Like when I'm discussing, okay, I think that this is a trade. If they give me pushback, that forces me to evaluate, okay, am I wrong? Or see what is their point. Are they correct? Are they wrong? Does that give me a regrade? Or do all of the guys that are great traders that I trust all think this is an A+? So maybe now I double the risk. If everyone that is an incredible trader sees it the same way, sees it the risk reward the same way, maybe it's a great trade, or it's going to fail. But in the long run, it's going to do well.
Absolutely.
And being able to bounce back ideas, because if you're working in a pod, there definitely is a level of groupthink. So you want to be able to see other points of views and also hear from people that trade differently. There's guys that I work with that are not really, pattern traders. They're more, idea traders. There are people that are more strictly momentum. There are people that don't really swing. You want to be able to hear perspectives from all different kinds of traders so that you can capture a little bit of their edge.
So Max, if people want to learn more about you, where can they find out more?
Absolutely. So there are multiple videos on SMB's YouTube, as well as actually starting in 1 week, we're going to be doing a weekly options meeting where I'll basically go over the best option trades of the week, specifically kind of focusing on shorter term options trades, and that's going to get going in the next week or two. So I'm very excited about that.
Awesome. And we'll provide links below so that way they can connect more with you. And again, thanks, brother.
Absolutely. Thank you.